Today at 4 p.m. Eastern Time, we have Nvidia's earnings coming out, and this is a really important event for those of you who are watching things like the NASDAQ and the S&P 500, but also those of you who are trying to get a better idea of what the US economy is looking like as a whole, because the semiconductor trade is so important. If there's a huge demand for technology, then there's going to be a huge demand inevitably for computer chips, and Nvidia is the leader in the computer chip trade. So I wanted to talk a little about what I am doing or prepping for as we get closer to this Nvidia earnings. Now, full disclosure, first of all, what I'm showing you here is Vantage's platform. It does not accept US traders, but I use a demo account on there just to test it out and to play around with all their different symbols. And I did want to mention that as we get started, today's videos is sponsored by Vantage, where you can trade things like stock CFDs like Nvidia. You can trade everything from indices to commodities, etc. So if you'd like to trade Nvidia, there's so many different offerings they have all in one singular brokerage. So there will be a link down below in the description if you would like to check out Vantage. Again, they've got everything from they pretty much got everything all in one platform. It is pretty remarkable. And another special sign-up perk for listeners is they do offer a deposit bonus for non-US traders who would like to get started with Vantage. So check it out down below. Let's talk Nvidia. So I've pulled up Nvidia on a daily chart, and I want to take a look first at a bit of price action here. If we apply some moving averages, you can see that the overall trend for Nvidia has been nothing short of pretty remarkable in the last few years. We've seen, Nvidia just on this monumental run to the upside, and there's no question why it is so important to the overall technology trade rally that we've seen in the last few years. Nvidia supplies a lot of the picks and shovels, if you will, to the semiconductor gold mining rush that we see happening. Everybody needs chips, and in order to have chips, the mass production that Nvidia has, as well as the highest quality stuff on the market, makes them a very big benefactor of all of this demand. So today, as you can probably imagine, is very important for Nvidia. And if we take a look at some of the past earnings season or earnings reports, you can see that Nvidia has had some really big volatile moves. Like, for example, when they popped up big time over here on their earnings, or if we take a look here where they had a big jump. And what is so important here is that even if you don't trade Nvidia, this has a huge impact on other areas in the market as well. The NASDAQ and the S&P 500 both saw big movements thanks to Nvidia's better than expected earnings. And the question today is whether or not this will be a repeat function where we see, a big jump in share price yet again as Nvidia delivers. But I want to break down how this could impact the NASDAQ. And in order to do that, we need to understand what the market is actually expecting for Nvidia's earnings today after the bell. So if we take a look at this little E here, what we can see here is that the estimated revenue for Nvidia is $28.737 billion, and their estimated earnings per share is 64.5 cents. And what you'll need to know about this is that the earnings here are very likely to beat estimations. It would be pretty shocking to the market and to me as well if earnings came in lower than these numbers, these estimates. That's really, however, not what's going to move the stock. Now, if you do get a miss on earnings, if these numbers come in surprisingly lower than expected, then the stock would probably sell off big time. But what's really important is the forward guidance. But before I get into the forward guidance, how do I know that there's such a strong probability that Nvidia will hit its earnings estimates? Well, first of all, if you take a look at the historically speaking, Nvidia almost always, these green E's that you can see if we zoom in on them down here, you can see the green E's signal times where Nvidia actually beats their overall expected earnings. So Nvidia most of the time beats their expected earnings. That's not the surprising part. However, the surprising part could be with such high expected future returns for Nvidia shareholders, if they come in anywhere short of perfect, it could scare the market a lot. What I mean by that is if they forward guide, which is again the company guiding what they think they'll earn into the future based on what they have in front of them, their demand orders, their future expected orders, etc. If they come out and they say, yeah, it's slowing, then the market's going to really not like that and potentially sell off the stock big time. However, what they need to do in order to continue to go up is what they've done each time recently. They've had great earnings numbers come out, but they've also guided that future earnings would be even more than what was previously expected. So you can see there's very high expectations for this. And I made the comparison on my live stream today that this is kind of like the Ronaldo of the soccer or football world. Nvidia is so important to the overall, tech trade because it's the best. It's the best in the game. The expectations are very high, and that is why the expected volatility, the expected move for Nvidia, according to the options market, is approximately a 10% move in either direction. Now, again, that is based on the idea of the demand for puts and calls on the stock. And what we can see here is that a 10% correction to the downside would put you around 114, and a 10% move higher would put you around $140 per share. Now, will we see such big moves? Maybe, maybe not. The options market does not always get it right, but that is currently the expected move for Nvidia, one direction or the other. But let's now talk about the potential movement that this could cause in the indices. As many of us are, index traders, or we watch, the NASDAQ, the S&P, etc. This is going to be huge because if you get a big pop for Nvidia, it could continue to drive the NASDAQ maybe back towards those all-time highs. It would not be out of the question that if you got a very smash hit earnings report as well as forward guidance on Nvidia, that we could see this thing make its move back up to that 20,750 level or so on the NAS 100 here. So something to consider. On the flip side, from a technical basis, if you see a failure for Nvidia to really smash expectations, we very well could head back to retest, in my view, something like 19,000 or 18,750, maybe a bit more of a retracement. And you may say, Nick, is it really reasonable that Nvidia by itself could cause a 3% movement in the NASDAQ? And I would say if it's disappointing enough, it definitely could, because it is so imperative to the overall technology trade. And remember that technology has been the leader of this market rally. And in order for this market rally to continue, I personally think you need to see, the leaders of this rally continue to fuel it. So Nvidia, Microsoft, companies of that nature. So we'll watch it very closely, and it has a huge impact on what could happen next in financial markets. The last point I want to talk about with Nvidia is the prospect of rate cuts coming down the pipeline in coming months. The Fed is expected to cut their interest rates going forward, and in the next following few meetings, they are expected to bring it down anywhere from 75 to 100 basis points. What does that do to Nvidia stock, and what does it do to the indices? Well, if the economy holds in there, it could mean much higher prices for Nvidia. Remember, a strong economy could lead to a lot of semiconductor demand. A lot of semiconductor demand could help to boost their numbers. So it's going to be really imperative, however, that we keep an eye on some key economic statistics to tell us whether or not the economy is staying strong or not. The last time around when we got NFP data coming out, it was not as exciting as expected. But next week, we get the latest round of jobs data, and markets will be very closely watching how many jobs the U.S. ends up adding in the next coming, or in this month of August, right? So we report the previous month's data on the new month, and so we'll see where that comes in. The other thing is we want to see unemployment rate not really continue to scream higher, right? It's at 4.3%, which is still a historically very low level of unemployment, but we don't want to see that number start to climb and continue to climb higher. We really want to see unemployment stagnate or even, just not go too much higher. That is the big point with that. So if you're somebody who is wondering, are rate cuts going to help Nvidia or help in the NASDAQ and all these, technology stocks continue to go higher? The answer is not as easy as, it's going to make them crash or it's going to make them rally. It really is. It depends what the economy is doing when those rate cuts start. Nvidia could be a huge benefit or have huge benefit from rate cuts if the economy continues to look strong. Of course, I'll keep you posted on all that here on my channel. And if you enjoy my commentary, do me a big favor and hit that thumbs up button on the video on your way out. Thanks for watching. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.